If you own crypto or want to own crypto, you definitely need to be aware of the big changes on the horizon for crypto and taxes. That is, if this new bill in Congress passes. I'll tell you what the bill says, why this is bad for traders, and why it's great for long-term holders like me. The big change on the horizon for crypto is that the wash sale rule might be coming to town. What is a wash sale rule? It's a confusing tax law that trips up new stock traders all the time. In short, the rule says that we can't claim a loss on our taxes for security that we still have an interest in. Okay, what? Okay, said a clearer way. We can't sell a stock at a loss and then claim the loss on our taxes if we then rebuy the stock within 30 days of selling it. So for example, I hold Palantir in my personal brokerage account. If my Palantir position went negative by say $5,000, the wash sale rule prevents me from selling at a loss and then putting that loss on my taxes if I rebuy Palantir within 30 days of selling at that loss. I can sell the stock still, I just can't get credit on my taxes for the lost money. If I were to wait 90 days or 100 days and then rebuy, I'm good. I can claim the loss on my taxes. Get it? Makes sense? The wash sale rule is just very old law set up to discourage rapid trading of stocks. So how does this change affect crypto? Well, it doesn't change anything just yet. This is a bill, it's a proposal, and it isn't law yet, but it's something you'll want to keep an eye on. But the bill says that beginning in January 1 of 2022, cryptocurrency will fall under the umbrella of the wash sale rule. I see 5 major things that are going to come from this. Before we get into those 5, if you enjoyed this kind of content, hit that like button for me so I know what stuff to keep creating for you guys. The first, trading volume for all the crypto will drop off dramatically because traders won't be able to claim all of their short-term losses like they used to. These short-term losses will have to be carried forward to adjust the basis of the coin when they repurchase it. This will make trading more expensive when you adjust for the tax hit. The second, the drop-off in volume I just mentioned might not happen entirely during 2022 because not all crypto traders are going to get the memo on this right away. Or they'll get the memo but misunderstand how the wash sale rule changes things. Wait until those traders file taxes in 2023. They will be in for quite a surprise. So expect trading volumes to lower between the start of 2022 and early 2023. The third, price stabilization. What's a big criticism of crypto? That it's too volatile. The question stands, how can it be a currency if every day it's worth wildly more or less? As a whole, I think the wash sale rule is going to disincentivize trading in and out of those coins. Now there's 2 sides to this coin. One is that traders stabilize values through the use of oversold and overbought indicators like RSI and MACD, but I think a larger portion of traders are actually momentum traders. They have a tendency to produce self-fulfilling prophecies through their jumping on the bandwagon of an upswing or on a capitulation. So again, I think the net effect will be more price stabilization. The fourth, in the SEC and IRS's eyes, the wash sale rule pigeonholes crypto as an asset instead of a currency. This allows for validation. While I don't agree that all cryptos should be treated as assets over currency, at least we have recognition from the regulatory agencies that crypto is a legitimate asset class. This wash sale legislation is kind of like the SEC and the IRS's way of saying, hey, we see you, we notice you, we don't really like you, and we're going to make it difficult if you keep insisting crypto is the real deal. Nothing about the wash sale rule changes whether these coins can be used as currency down the line either. Stocks can be cash alternatives, crypto can be, gold can be. Nothing about the wash sale rule changes any of that. The fifth change I see this bringing about, it will change how comfortable people are using excessive leverage in crypto. Those traders who have levered by 5, 10, 50 times their cash position will ease up as part of the wash sale rule hitting crypto. This too is a good thing for the crypto sphere as a whole. Reducing leverage reduces volatility and quite honestly reduces criticism from politicians and regulators because there aren't these huge swings one way and the other. So that's the 5 as I see it. Trading volume will reduce between now and through next tax filing time of 2023. Volatility volatility will drop off, which stabilizes the price. The government confirms crypto as an asset, which is a big step in the right direction, and it will lessen the amount of leverage in the crypto space. This is all part of the maturation process that a new asset like crypto needs to go through. This isn't a bad thing per se. It feels more like a necessary thing, an expected thing. No more excessive trading in and out. Just let your investment sit, let it mature. Let the decentralized infrastructure continue to develop over the next 2 to 5 years. You still hodling? I am. Thanks for watching, and I'll catch you on the next one.